Hello, and welcome to the Summit View from Glassy Mountain Advisors. I'm Jordan Smythe, the founder of Glassy Mountain Advisors, and in this condensed version of our quarterly commentary, I'm going to provide a brief overview of our thoughts on the fourth quarter of 2023 and our market outlook for 2024. You can find more details in the latest quarterly view on our blog. Stocks surged in the fourth quarter of 2023 to cap a fantastic year for investors, despite early year predictions of a recession and weak stock market returns. The S&P 500 gained 11.7% in the quarter, leading to a remarkable 26% increase for the full year. Technology stocks, after a disappointing 2022, took the lead in 2023, driven by excitement about artificial intelligence opportunities. Bond prices climbed as interest rates declined. The Bloomberg Barclays U.S. Aggregate Bond Index delivered a 5.5% return for the full year, a great improvement over 2022's dismal returns. The U.S. economy also performed well, boosting hopes that the interest rate hikes made by the Federal Reserve will decrease inflation to acceptable levels without triggering a recession. The Fed held rates steady as the Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation, declined further to an annual rate of 2.6% in November, closer to the Fed's target rate of 2%. Employment remains robust, with a 3.7% unemployment rate defying predictions of a slowdown, though some signs of a softer job market are emerging. Real wages, or wages adjusted for inflation, increased as inflation slowed, boosting consumer spending. Gross domestic product results released in December showed a 4.9% rise for the third quarter, and GDP likely continued to increase in the fourth quarter. We are optimistic that the market's run will continue this year, though returns are not likely to match those in 2023. If inflation continues to decline and economic growth slows, as we expect, the Fed could begin cutting rates as early as its March meeting. Risks to the market and economy include persistently high inflation, potentially due to disruption of oil prices in the Middle East. Continued wage gains could also lead the Fed to keep rates higher for longer. Finally, the U.S. presidential election will grab headlines and provide uncertainty during the year, creating market jitters along the way. Despite these risks, we believe that the prospects of ongoing economic growth, lower interest rates, and increased corporate earnings will provide attractive returns this year and beyond. If you'd like more details on our views, go to our blog at glassymountainadvisors.com for our December 2023 quarterly view. Thanks for joining us. Take care.